Welcome back to The Explainer, everyone. Today we are unpacking a truly standout quarter. We're looking at Skyward Group's Q1 2026 earnings. Now, if you follow the specialty insurance and reinsurance space, you know this quarter has been highly anticipated following a major strategic move by the company. So what we're going to do right now is examine the catalyst behind these massive results, and we'll see exactly how a major acquisition is completely reshaping their financial profile. Whether you're an investor looking for the next breakout stock or you're just tracking market consolidations, this is honestly a masterclass in strategic growth.
Okay, let's dive right into our roadmap for today. 1. Record Q1 results. 2. Insurance metrics. 3. The Apollo catalyst. 4. The Skyward Group brand. 5. Investments in equity. And finally, number 6, strategic outlook.
All right, kicking things off with Section 1, Skyward's record first quarter. We are going to unpack some massive bottom-line growth here. Now, top-line growth is always nice, right? But the bottom line, that is where the story of this phenomenal quarter truly begins. Right out of the gate, Skyward Group reported a net income of $49.7 million for the first quarter. To put that into perspective, that is an impressive 18% rise compared to the $42.1 million they reported in Q1 of the previous year.
But wait, when we look at the diluted operating earnings per share, the jump is, it's honestly even more staggering. Operating EPS hit $1.25 for the quarter. That represents a massive 39% jump year over year. This tells us that the underlying earnings engine of the company isn't just growing, it's scaling incredibly well.
And just to round out these top-level financials, we have an annualized operating return on equity of 20.3%. Now, ROE essentially measures how effectively management is using investors' money to generate profit, right? And anytime you see an operating ROE crossing that 20% threshold in this sector, it's a major indicator of overall financial health and incredibly efficient capital management. Moving right along to Section 2, unpacking the insurance metrics, or what I like to call their healthy core engine. Look, those massive bottom-line numbers we just talked about, they don't just happen by magic. They require some really intense underwriting discipline. And this brilliantly illustrates that. The loss ratio improved to 61.1%, down from 62.4% on a pro forma basis, which basically just means if we adjust last year's numbers as if the Apollo acquisition had already happened. Lowering your loss ratio while simultaneously expanding your business is literally the holy grail in insurance, and it proves their underwriting standards remain rock solid. So while the losses tightened up, the premiums actually grew. Gross written premiums hit $667.7 million, which is a really solid 9.9% growth over last year's pro forma numbers. And if you look closely, that growth is being driven heavily by specialty divisions like accident and health, as well as global agriculture. Taking all of that together, you get this incredible validation from Chairman and CEO Andrew Robinson, a combined ratio of 89.5%. Just as a quick reminder, this metric measures claims and expenses as a percentage of premiums. Anything under 100 means you're profitable, but a sub-90 combined ratio, that's like pitching a shutout in baseball. It is the absolute hallmark of a highly profitable, tightly run insurance quarter. Okay, Section 3, the Apollo acquisition impact. This is the strategic catalyst we've been waiting for. Finalized back in January, the integration of Apollo and their Lloyd's platform completely changes the math for Skyward. To really grasp the impact, we need to look at a new term here, managed premiums. By managing Lloyd's syndicates, including those backed by third-party capital, Apollo generates managing agency fees and performance-based income. So what does this mean? It means they're making money without taking on the pure underwriting risk for those specific premiums. It introduces a highly lucrative, diversified new revenue stream to the whole operation. Check out how the revenue is split into two operating segments now. You've got the Skyward Specialty segment bringing in $365.4 million in total revenue, while the newly added Apollo segment brought in $80.1 million. Notably, Apollo generated $10 million in underwriting fee income right out of the gate in its very first quarter as part of the combined company. So, the crucial point here, and you really don't want to miss this, is the massive 49% growth rate in fee-generating gross written premiums, which now total over $300 million. It's a huge early indicator of the fee-based earnings growth that management expects to scale over time. All right, Section 4, launching the Skyward Group brand and really unifying the vision. With two absolute powerhouses now sitting under one roof, the corporate rebranding strategy was officially put into effect. Skyward Group is now the unified holding company. But brilliantly, they are preserving both the Skyward Specialty and Apollo market-facing brands.
It honors their individual heritage and those incredibly strong market reputations, while giving us, the investors, a clear, unified global holding entity to analyze.
That brings us to Section 5, Investment Portfolio and Equity. Let's look at this strengthening balance sheet.
Let's actually pop the hood and look at the balance sheet. You can clearly see this massive step up here, a 39.3% jump in net investment income, rising from $19.4 million to $27.1 million. Now, this isn't an accident. It's driven by three main factors: a higher overall yield, a significantly larger asset base, and crucially, the addition of the Apollo portfolio into the mix.
And naturally, all of that flows straight into stockholders' equity, which jumped a solid 21.3% from the end of 2025 to over $1.22 billion by the end of Q1 2026. This huge bump is largely attributable to issuing common stock for the Apollo acquisition, which obviously expands the total size and capital base of the business.
So what does this all mean for the actual literal value of a share? Well, book value per share, which, as you know, is the truest measure of a financial company's net worth, climbed to a very impressive $27.50. That's a 10% sequential increase from just the prior quarter, and a stunning 31% year-over-year jump.
Finally, Section 6, Strategic Outlook and Summary. Building for the next market cycle.
So how exactly is Skyward Group building for the future? Let's just quickly summarize their core strengths from this quarter. You've got a highly disciplined sub-90 combined ratio and a 20.3% operating ROE. You are seeing 49% fee-based premium growth coming from the Apollo segment, but honestly, most importantly, you now have a heavily diversified portfolio spread across global markets. This kind of diversification actively lowers their exposure to those standard property and casualty underwriting cycles.
And all of that lines up perfectly with CEO Andrew Robinson's closing thought here. This whole new corporate structure and these diversified revenue streams, it's not just about getting bigger for the sake of getting bigger. It's about delivering disciplined results that maintain top quartile performance no matter what part of the broader market cycle we happen to be in.
Which leaves us with this final, kind of intriguing thought to ponder. With such strong early indicators straight out of the gate from the Apollo integration, can Skyward Group really maintain this top quartile performance across the next market cycle? The foundation is certainly there, and their execution this quarter was absolutely flawless. Thanks so much for joining me for this explainer, and we will definitely see you next time as we continue to track the data.